Columbus, Ohio has been among the strongest apartment market performers in the Midwest during recent years. Has that momentum been sustained as we've kicked construction level into a higher gear? We're going to be exploring that today on Apartment Market Dynamics from MPF Research. I'm Greg Willett. Thanks for joining us. Looking at those new construction levels in the Columbus apartment market, we delivered 671 units during first quarter, and that took the Metro's annual completion pace to 4,042 units. That's the biggest block of new supply completed here on an annual basis since the 2000-2001 timeframe. Like most spots in the Midwest, Columbus has come off of a rough patch during the winter months when demand seemed to be held down by the weather. There were net move-outs from 748 units in first quarter, but the annual demand total remains pretty hefty at 3,027 units, not quite up to the completion volume, but still a good tally. With demand not quite keeping pace with completions of late, we've seen a little bit of softening in the Columbus apartment occupancy rate, but the overall number is certainly still healthy. As of first quarter, that occupancy number was 94.5%, down 60 basis points over the course of the past year. Furthermore, as you dig down into those numbers, it's not really the new construction that really seemed to have the impact there. Most of the vacancies here are actually in that bottom tier Class C product. So for top tier product, the occupancy rate is strong, 95.7%, even with those recent completions. So that new supply that's coming online, in fact, is leasing really, really well. Turning our attention to the rent growth numbers, what we've seen is that the annual change as of first quarter was 3% even. That is down from growth that had been at 4% to 5% back in 2011 to 2012, but it is up from growth levels that were seen in the last half of 2013. And furthermore, those top tier numbers, again, encouraging. You're getting annual rent growth that is a little above the 3% mark in top tier product, even with that new supply coming online. All right, let's continue to talk about new supply a little bit because we are not done with the construction boom in Columbus. Quite a few more units on the way. The exact tally under construction at this point is 4,305 units. Really, those new supply numbers are concentrated in a couple of different pockets. One is the urban core, and the other one is a couple of suburban markets, and those are the Upper Arlington, Northwest Columbus, and the Westerville, New Albany, Delaware area. What's going to happen in those two pockets? We expect slightly different results in the two areas. And starting with the downtown area, that one should be able to handle the new supply really well because this market is in great shape right now. You look at the downtown University District submarket, occupancy is a whopping 97% right now. Rent growth is at 4.3%. So even if new supply slows down the performance a little bit, that market is still going to be in really good shape. Going to those suburban markets, it's a little bit more of a competitive environment. Occupancy is still pretty good in both of those places. We are at 95.8% in Upper Arlington, Northwest Columbus, and 94.9% in Westerville, New Albany, Delaware. But the challenge here is going to be on the rent growth side. They have both already seen the rent growth numbers slow down quite a bit. On annual change, we're only at 0.5% to 1% in each area at this point. And so as more new supply comes into the marketplace, it would actually be surprising to see any rent growth at all in the top tier in these two suburban locales. So again, look for a little bit more competitive leasing environment in those two spots. Our overall outlook for Columbus is a good story with occupancy remaining at 94.5% to 95%. Rent growth coming in close to that 3% mark. So again, some healthy numbers there. Downside risks come from that volume of new construction. And then one more thing to watch here is the employment growth numbers. They've been really robust, but for the last few months, the stats coming out of the Bureau of Labor Statistics do show a little bit of slowdown. So we are going to need some jobs to handle that new supply. So that's our story on the Columbus apartment market. I'm Greg Willett. Thanks for watching Apartment Market Dynamics from NPF Research.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.